Okay, please take note that this presentation is purely for education purposes. They are of my opinion, not of IG's, and there's nothing to count specific investment objectives, financial situation, or particular needs of any particular person. Let's move on to the markets proper. Okay, so what's happening globally right now? I mean, a bit of my clients, some of the traders I speak to are a bit confused by the rallies that's happening for the past 2 weeks or so. And then they were saying that it's not a reversal, things like that. I mean, at the end of the day, as pure technicians, right, we always use levels to tell us indication whether it's a true reversal, or is it just continuation, or is it just consolidation. Okay, I think fundamentally what's happening is that oil is stabilizing, which is why causing the equities market to rally. Now, the correlation between oil and the equities is really, really interesting because we have not seen such correlation in the past decade or so. All right, it was very, very rare that we see oil dictate the equities markets, but it is what it is. I think oil prices is definitely an indicator of the economy's, global economy's health as well, which is why a lot of investors and market participants are paying a close attention to it. So you see oil price stabilizing, I think partly because there are a lot of production ceiling talks by OPEC members like Saudi, by Venezuela, Russia, Iran lending support as well. So all these production fees, and suddenly the market, a lot of investors and market participants think that, hey, oil price will start moving up from here, and that's where the equity markets start to rally. In my opinion, I would say don't look too much into it. I think a lot of lip service is happening where we are with regards to the oil market. I mean, if you are churning out oil at record levels already, production fees does not mean much. Okay, if you really want to have a sustainable rally in oil, I would say the production cuts must happen first, and then demand has to pick up from China and emerging markets before we can see oil price breaking through $36 or $40. Okay, right now oil is just consolidating to me. Okay, I'll cover a bit more on the commodities later. But moving fundamentals out of the way, so again, let me just bring us let's cover a bit of theory first. Okay, so essentially all my webinars, I'm just trying to identify which phase the market is in, because once you identify the phase, it's so much easier to apply the right strategies and understand where the market is going and then plan the trade accordingly. Okay, so based on price action theory, I mean, an uptrend is a series of higher highs and higher lows by studying the swings on charts. Downtrend is lower low, lower highs, and of course you got the consolidation pattern, which is it can be what is shown on the PowerPoint slide is a wedge, but it can be any form of chart pattern. It can be head and shoulders, can be a channel, it can be a flag, whatever. Okay, but basically these are three phases. I'm trying to categorize the market so that we have a better idea of what's happening. Okay, so moving the markets proper. Now I did mention in the last webinar that I have incorporated MT4 into the webinar, into how I trade as well, because I'm basically a lazy person. So whenever I scan the markets, I want to have a big overview of what's happening, and then I just cherry pick my trades. Okay, so what I do is I'll always pick the nicest charts with regards to trending markets. So if I see a nice uptrend or downtrend, I'll just zoom in and I start trade planning. Okay, but in the beginning, I always scan all the charts. I scan about 20, 30 different markets, whether it's commodities, equities, FX, indices. I scan the markets to find the nicest looking charts, and then I just go with the flow. So that's my approach to trading. Okay, I do not want to trade in a chart whereby it's mixed, there's no direction, and I'm trying to push the market. Okay, so for those of you who are retail traders, most of us are retail traders, I would say, we cannot push the markets. I mean, if those of you who are not retail traders and trading like trillions of dollars, then you probably wouldn't be trading IG. But what I'm saying is that as retail traders, we do not push the markets. We're just followers of the market. So it's better to find a market that is nice, trending, and just join the trend. All right, you see a nice river flowing downwards. Why would you want to swim against the current? It takes more effort, isn't it? So if you see if you see the screen that I'm looking at, basically is MT4. And what I've done is that I categorize based on profiles. Okay, so if you look at my profiles here, I have a USD profile, I have a yen profiles whereby I put all the yen pairs that I normally trade. I have the crosses, Euro Aussie, Aussie CAD, Pound Kiwi, Pound Aussie. These are all the crosses, and I have the indices. Okay, all the index, the DAX, S&P 500, Nikkei, things like that. Okay, so it's easier to have a quick look at what's happening. Okay, so let me start with indices, which is what I normally do. Now, quick look at indices. Okay, my reference point is the daily chart because the daily chart is I'm a swing to intraday trader, so daily chart is gives me the indication of what's happening out there. So if you look at the all the daily charts on the indices now, what's happening? What's happening to the world right now? It's quite straightforward. That's why I love looking and having an overview like that. One look, you can see that there's a bit of a rebound, right? There's a bit of a rebound. You can call it short covering, you can call it a short squeeze, but there's a bit of a rebound. Now the question is this rebound a reversal or is it a correction of a downtrend? What do you guys think? Do you think this is a reversal or just a correction of a downtrend? You can just type your answers into the question box. Don't know. Thanks, John. Thanks for replying. Yeah, Sri, you say it's a correction. Dead cat bounce, Grace. Reversal. Okay, good answers. I mean, there are possible scenarios, but let's explore. Let's explore, okay? Could be correction, make new high. Raju. Yep, possible. Okay, thanks for all the answers. Now, let's take the S&P for example. Okay, I'm just going to use MT4 for a while and before I jump into full real time later. So now if you look at the daily chart, right, it's a bit more consolidating, isn't it? Especially this area here. Okay, it's a bit more consolidating. All right. But if you look at the weekly chart, okay, what do you think? It's also consolidating. Right? Now, very tricky thing happened 2 weeks ago, caught a lot of my clients, a lot of traders off guard. This is S&P 500. The 1850 level was a key level that I was paying attention to. If you look at what happened, right, let me just zoom in a bit. The market 2 weeks ago actually pierced through 1850, which caused a lot of traders to think that, hey, it's a bearish reversal. And this is a very significant level because 1850 has been really key support since 2014. But one really key thing to note, okay, the weekly chart is very important whenever you're looking at indices. Why? Because you look at this 1850 level. You look at this candle here during 2014. Market, the bears try to push it down all the way to about 1820 or so, only for bulls to buy back up. And you look at June 2015, it pushed it all the way down to 1830, only for the bulls to push up again. And you look at January 2016, same thing. Bears push it all the way down to 1811 before it bounced up again. And lastly, when was this? 7th February 2016. All the way down, this is lowest actually. It went all the way to 1809, 1808 before the bulls push up again. So what am I trying to say here? What am I trying to say is this. Now, for those of you who thought that the market has reversed to the downside and tried to short here, okay, if you see such a candle forming at these levels again, you should cut your losses or get out. I spoke to some clients and I see that they're still holding on to their shorts, which for me doesn't really make sense because it seems that the market is consolidating already. Okay, look at how many times it rebounded off here. So I was very keen on watching these levels here around the 1850, 1840. Now, of course, on hindsight, it's easy to say that, hey, you know, a bullish pink candle has been formed and definitely the momentum might be reversed to upside, correct? But at that point of time when we were trading 2 weeks ago, right, all we see on the shorter term charts are bearish candles to the downside, correct? So if you look at the daily chart, for example, okay, so where we were trading, this was the area whereby it pierced through, isn't it? Here. So some of my clients, a lot of them were trying to short from here. And yeah, they were in profit. And when they keep their shorts, and what happens is that it bounced up and they're still holding on to the shorts. Can you see around this level here? Can you guys see? Okay, this level here. Now, so what am I trying to say is that intraday wise, all right, it's still possible to short if you see the market breaking the support 1850. Okay, intraday wise, meaning that you're shorting off the 1 hour charts and things like that. But at the back of your mind, you need to be mindful or you need to be aware enough to understand that on the weekly chart, these are the key levels that the bulls might come in. So you understand where I'm coming from? So if you're trading on intraday wise and you say you're shorting because you break 1850, I say awesome. Go ahead, short it. It's an intraday trade. But if you see bouncing back up like what it did like that, then it shows that this support is still held, especially if you see this weekly candle being formed. You understand where I'm coming at? Okay, so just be mindful. So right now, what the S&P, in fact, what a lot of the indices are doing is that it is consolidating most of it on a weekly chart. So if you look at the lines here, okay, it might be consolidating and it might come back all the way to the, let me just draw this here. It might come back to the top here. Possible. Okay, hey, hi John. Thanks for coming. I thought you're not around. Okay, so it might be consolidating back here. Okay, but right now where we are at resistance. So for S&P, for most of the US indices, I'm not really touching it because it's not trending to me. It's consolidating. Okay, the key level to watch out for if you still want to trade the S&P 500 is the 1940 level, because there's a high chance that you might consolidate back to the top of this little wedge here. Okay, so that's the S&P 500 for you. All right, but let me zoom back out to show all the indices, right? But if you notice, right, most of the indices are telling roughly the same story. Sorry, let me just adjust the charts here. Okay, you see most of the indices are telling the same story. If you look at the Nasdaq, for example, you go to the weekly chart, same thing. You see this level here? You see that? Around the 4,000 level, same thing. Okay, same thing for Dow Jones. Okay, so most of it are telling the same story. Now, there are a few indices that are a bit more bearish. Okay, there are a few indices that are a bit more bearish. Let me show you. If you look at the DAX weekly chart, okay, you see the difference between the DAX and the S&P or the Dow Jones, and you see the difference. Okay, the difference is that if you look at this level here, so my marker is my marker is not behaving like how I want to. Give me a moment. Let me just. Okay, so this level here, okay, you notice that this is actually a lower low compared to here. You see that? So what I'm trying to say is it looks slightly different from the S&P and the Dow Jones because it has made a lower low. It has made a clear lower low. So where we are right now around the 9500 level is actually a resistance area. Okay, so you can see like lower low, lower high, and another lower low. So there's a high chance that anywhere between, I would say the resistance is closer towards the 9, let me see what level is this, around 9650 area, around here. We're close to it. In fact, it went to a high of 9592. So around the 9650, it is a resistance area, and there's every chance that we might make another drop back to the bottom, at least around the 9030 area. Okay, there's a chance that we might do that. All right, so that's the DAX for you. Another index is the Nikkei. Okay, let me just move on to my pro real time. But basically, I just wanted to show you MT4 first. It's because I want you to be able to use the market scan to from there decide which the most trending markets. Okay, but for analysis, normally I use pro real time chart. So let me use the pro real time right now. I'll go back to MT4 when we talk about FX as well. But let me go to the normal charts that we have. Okay, so if we go to, we're talking about DAX, right? Okay, so if you look at the weekly chart, the DAX, right, you can see that we have broken below this little wedge trendline support area. Okay, we have broken past the strong support at around 9300 or so. Okay, right now you can see clearly that we are close to the resistance area at around the 9650, which I mentioned just now. Okay, so let me delete some of the circles here to avoid confusion. Okay, but this area here, this is a resistance area. Okay, for it to at least come back to test this bottom here before we say whether it will rebound upwards or it will make a new low. Okay, so that's the DAX for you. So DAX is a bit more bearish. Another one that I think is a bit more bearish is the Nikkei as well. So a lot of the indices, it has rallied for past 2 weeks, and we are at that level whereby if it wants to drop, it will drop from here. Okay, if you look at the Nikkei weekly chart, you can see that this key level of 16,500 or so has been broken. Okay, yes, it's supported by the 15,000 level all the way here. Let me just draw a line for you. Okay, but right now we are at that level. around the 16,200 level. So it's going to drop this, it might drop to where we are right now, back to maybe near the 15,002 or so. Okay, MACD is making a nice convergence lower low as well. All right, if you look at the daily chart, this is Nikkei, by the way. Okay, if you look at the daily chart, all right, you can see that there's a bit of a double top scenario here, which means that this level is being respected. Okay, so I'm not surprised if we make a push down back to the previous low, 115.2, 15.3. Okay, because as far as I'm concerned, in terms of price action, this is still a downtrend. You see lower low here, lower high here, another lower low here, and this is just a lower high. So it might start moving down again. Okay, my only concern on daily chart is that there's a bit of a bullish divergence in the MACD. Okay, bullish divergence. See how it made a lower low here, this swing, compared to this swing. Let me just draw a circle here. This swing here, compared to this swing, see this lower low. However, on the MACD, it made a higher low. So that's actually a bullish divergence. Okay, a bullish divergence. Okay, but I'm just saying that this is still strong resistance. And if it's going to push down, it might push down back to near the previous low. And it's still, there's some points or there's some pips we made while it made a push down. Okay, so I'm just showing you the difference between S&P and DAX and Nikkei. I think Nikkei and the DAX definitely looks more bearish. All right. If you look at the another Asia country, let's talk Singapore. Singapore blue chip. Okay, same thing. Singapore blue chip looks even more bearish. Look at the weekly chart. Let me just zoom up for you. Okay, I think among all the indices to short, I think Singapore blue chip looks the best because look at this. This is a weekly chart. Look at how nice it broke the key support level of about 298 to 300. It's a very strong support level here. It is broken nicely. We are living below that. And now it's coming back to test this whole area again. See all these touches here? Support, support, and now turning resistance. So where we are right now, around the 300 level, this is a place, if it's going to drop, it's going to drop from here. And my first target will be the previous low, anywhere about 290 or so. Alright, just be mindful there's a bit of positive, I say bullish divergence as well. Okay, but it still looks bearish. Weekly chart is still in a downtrend. Daily chart though, daily chart is slightly different. Daily chart has reversed the upside because it's broken this high. But I'm still very keen to see what happens around the 300, 305 area because weekly chart, as far as I'm concerned, it is still in a downtrend. And I'm happy to follow the trend down to at least the previous low at around 290. Okay, so that's Singapore blue chip. Let's take a look at the Hang Seng right now. So I mean, based on my question just now, I asked you whether it's a correction or a reversal, right? The answer to that is that it depends on which time frame you're looking at. On the long-term perspective, all right, most of the charts are still in a downtrend. Okay, except the S&P, except the US indices. So US indices is still consolidating, but if you look at the Nikkei, if you look at the DAX, it's in the downtrend. You can't hear me, is it? Sorry, I mean, the rest of you, can you hear me? Because my microphone symbol is lighted up. Anybody else can't hear me? Okay, that's a stupid question because you can't hear me, you can't hear what I'm saying. But okay, yeah, a few of you reply. Irene, I think it might be your speakers. Do you think you can try the volume or maybe exit and enter? Yep. Okay. Sorry about that, Irene. Yeah, thanks, Irene. Okay, so just be mindful what you're trading and which one looks more bearish or bullish. Okay, so let's take a look at Hang Seng, another index. Now, Hang Seng, we are not. It's still bearish. Okay, if you look at price action, it's lower low, lower high, and lower low. Definitely bearish. But I'm also aware that we have hit a major support at around the 18,500 level. So you see this support here, 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 here. You see support here. So this is very key support level. It has rebounded off it. I'm keen to see let it retrace up to 20,000. Okay, 20,000 is another key level before trying to take it down again, at least back to the previous low. Okay, so I'm not going to do anything now. I'm going to see what happens at 20,000, but the downtrend is definitely still intact on Hang Seng. On the daily chart, the Hang Seng, you see there's a bit more consolidating. It's made a lower low, but it bounced up, and it's approaching the key level of 20,000. So just bear in mind at the 20,000 level what happens to Hang Seng. It is a key level. Okay, you see how beautiful divergence is. Divergence is very nice, especially in trending markets, because it gives you a heads up on when the trend might be exhausted. So if you look at the daily chart, for example, right, it's a nice downtrend. It made a nice lower low, but if you look at the MACD here, it made a higher low. So any surprise why this rally happened? Not really, not really, because the MACD gave a sign that the trend is waning, the strength of the trend is waning, and there's a bullish divergence. Okay, so I'm not surprised it's ready. However, right now, the 20,000 is pushing a key resistance level of 20,000, and I believe that the bears might come in again and push it down maybe back to the previous low of about 18.5 or so. Okay, that's the Hang Seng for you. And let me touch a bit on the China A50. All right, China A50, same thing, downtrend. See, most of the weekly charts are in a downtrend. Okay, and we are at the key resistance level around the 9,002 or so. We have expected, we have bounced off that. Okay, if you look at the daily chart, okay, this whole level here, around 9,000, we are at that level. Okay, so there's a possible reaction and might push down back to previous low about 8.5 or so. Okay, any questions on indices? So I mean, even if you're bullish, right? Even if you're bullish on indices, most of the indices we are very close to the resistance level. So in terms of probability of buying it, it's not good anymore. Okay, but if you're bearish, then there's more high probability that the resistance might be expected. But in terms of all the indices, like mentioned, I think the US indices looks the most consolidating. The rest still look rather bearish to me. All right. Sri, but now there's also a hidden divergence. Are you talking about bullish or bearish divergence? On which time frame talking? Is it weekly chart? Bearish divergence. Daily chart, there's a bearish divergence. Where is it? Let me see. Where's the divergence? I don't see any divergence. So it made a higher high. Price had made a higher high. This was a divergence that spotted. It made a lower low, but it made a higher low. So this is actually a bullish divergence. Hang Seng PL. What's PL, sorry? Oh, you're talking about Hang Seng. Sorry, Chinese 50. I'm so sorry. So sorry. Hang Seng, let's see. So you see there's a bearish divergence. Hang Seng, this is a bullish divergence which happened. Oh, okay. I see what you mean. Okay. So you're talking about this high compared to this high, which is a lower high, but this high compared to this high is a higher high, correct? Yep, spot on, bearish divergence. I agree. And it supports the case of the resistance level. Okay, it's just that, okay, for me, right, divergence is a signal, it's not confirmation. I still like to combine it with a key level. So let me just go back to the weekly chart. Okay, it's just that if you look at the weekly chart, let me just zoom out a bit, right? Even though I'm keen to short it, okay, I prefer it to go back close to the 20,000, at least the 19,009 level. All right, that's where my moving averages might catch up a bit more. And it's just that this support here is really strong. It's really strong. So I prefer let it rebound a bit higher, at least close to 19,900. All right, so you're right. There is a bearish divergence on the daily chart. Okay, but I'm waiting to at least make a double top here, close to 99, 20,000. All right. Did I answer your question, Sri? You're correct. There's a bearish divergence. Thank you for pointing that out. Okay, but it is consistent with the trade plan of going short near 20,000. Okay, the bearish divergence just adds to the trade plan. But thanks for pointing that out. Good spot. Bearish, Raymond, you got a question? Bearish divergence only happen in uptrend. Not really, no, Raymond. Divergence depends. Okay, when you say uptrend, downtrend, it depends on which time frame you're looking at as well. It depends on which time frame you're looking at, because a downtrend, right, on the daily chart. Yeah, for me, the bearish and bullish divergence normally happen at turning points. So for example, just delete this area here. So when, for example, this area here was a nice downtrend, and then the downtrend got a bit tired, and then you see a bit of a bullish divergence here. That's why I reverse. Correct? And then right now it's coming down. It's still in a downtrend to you. Yes, there's slight bearish divergence. I mean, that's why for me this divergence is stronger. You have a point there. You have a point there. But for me the trend is not the most important. I rather see the divergence at turning point. You get what I mean? So for me, this is a nice bullish divergence that shows that the downtrend is a bit exhausted. The one that Sri pointed out, yes, is valid. Okay, but it doesn't show much. It's still consistent in my trade plan of shorting around near the 20,000 level. You get me, Raymond? But you have a point there. I know where you're coming from. Does that answer your question, Raymond? Okay, thanks. All right, so that's it for indices. Any other question on indices before I move on to FX?